massive crash in the markets. Sensex is down by over 2,500 points. And in fact, Nifty, they're down over 700 points. Market crash over fears of war, US recession. Let's go across to my colleague Krishna, who joins us live from the newsroom. Krishna, a very good morning to you. What really explains this crash in the markets on Monday?
Right now, this has been building up. Bear in mind, Sensex was down by over 700 points in the last trading session, which was on Friday, the 2nd of August. And the Nifty was down over 200 points. And the markets opening with something called as a gap down opening, which means that it was in the red right from the get-go when trading opened this morning. And now the crash has ballooned to the point where both the Sensex and the Nifty have lost 3% each nearly. You have Sensex down by over 2,500 points, 2,550 points. You have Nifty down over 700 points as well. The India Volatility Index is a measure of the gauge of the volatility in India stock markets. The India Volatility Index of VIX is up by 60%. That's the levels of volatility the Indian stock markets are witnessing right now. And it is in line with the way markets have been falling across the world. Wall Street was down in the last trading session on Friday night as well. They opened well on Friday morning because, the US Federal Reserve did hint at a possible rate cut in the month of September this year, the first rate cut that the US will do in 4 years. But then other data that came after that have really spoiled the party. The US manufacturing data was below expectations. The US jobs data was below expectations. All of this led to the fear that the US economy could be looking at a recession very soon. And these fears have spread across stock markets all over the world because the Asian markets are down. Japan, for instance, and Nikkei, the Japanese stock market index, Nikkei has experienced its worst crash since the year 1987. That's the level of fall by around 3,500, 4,000 points. The Nikkei fell. So that's how bad the crash was in Japan. There has been a sell-off across Asian markets, and the Indian markets are also not immune to this. And that's probably the reason why you have the Indian stock markets experiencing a meltdown today. But it's not the first time they've been down. They've been down from the last trading session onwards, but the fall today has been steep. If it was 700 points, on Friday, it is now 2,550 points. As of now, we don't know because things are not looking good at this point in time in terms of the overall geopolitical scenario as well. There are fears over war. The escalation of the war in Gaza, is sending a chill down the spine of economies across the world. So those fears of war, the fears of a recession in the US economy, and the fall in the stock markets consequently because of these fears are the reasons why the Indian stock markets are sliding. They're cracking at the moment. We don't know if this is the lowest that they can go for the day. Both the Sensex and Nifty down by around 3%. They could go lower, we don't know. But for now, all markets, Dalal Street is in the red, and things are not looking good for the trading sessions going forward. So bear in mind, the Indian stock markets are also under the radar for being overheated, or in the sense the valuations are extremely high because of the kind of bull run that they've had. So there could be that factor playing as well. But for now, Indian stock markets in the red and going further deeper into the red. Back to you, Neha.
Thank you very much, Krishna, for joining us with all of those insights.